Credit scores in the UK, what actually affects yours? Right, I need to tell you something that might genuinely shock you. Your credit score, that number you've been obsessing over, the one you check on your app every other week, that exact number means almost nothing. Seriously. No lender in the UK ever sees it. And yet what's sitting asterisk behind asterisk that number? That affects everything. Your mortgage rate, your phone contract, whether you even get approved for a basic credit card. So let's talk about what actually matters. Because here's the problem. There is so much nonsense floating around about credit scores in the UK. People think checking your score damages it. People think you need to carry a balance on your credit card to build credit. People think earning more money means a better score. None of that is true. Not a word of it. And the cost of not understanding this stuff is real. We're talking thousands of pounds in higher interest rates on a mortgage. Or getting rejected for a perfectly normal bit of borrowing and having absolutely no idea why. So today, I'm going to walk you through exactly what affects your creditworthiness in the UK. Not the myths. Not the guesswork. The actual stuff that matters. And more importantly, what you can do about it, most of it completely free, starting today. Let's get into it. So first things first. We need to clear up what a credit score actually is in the UK, because this is where the confusion starts. In the UK, we've got 3 credit reference agencies. Experian, Equifax, and TransUnion. Each one holds a file on you, your credit report, and each one generates a score based on that file. Here's the kicker though. They all use different scales. Experian scores you out of 999. Equifax goes up to 700. TransUnion maxes out at 710. So already you can see the problem. There's no single, universal credit score. You've got 3. And they don't even agree with each other half the time. But here's the really important bit. When you apply for a mortgage, a credit card, a car on finance, whatever it is, the lender does not just look at your Experian score and go, oh, 742, yeah, that'll do. They pull your full credit report and then run it through their own internal scoring system. Every lender has their own criteria. Their own secret recipe. So the score you see on ClearScore or Credit Karma or the Experian app. Think of it as a rough guide. A weather forecast, not a guarantee. That said, the stuff that makes up your credit report, that is absolutely critical. So let's break it down. Number 1, and honestly this is the single biggest factor, your payment history. Have you paid your bills on time? And I don't just mean your credit card. I mean your mortgage or rent in some cases, your phone contract, your broadband, any buy now pay later agreements, yes, Klarna counts now. If you miss a payment or you're late, that gets recorded on your credit file. And it stays there for 6 years. 6 years. One missed payment from 2021 could still be following you around in 2027. Now, the good news is that recent history matters more than old history. A missed payment from 5 years ago isn't going to hurt you as much as one from 5 months ago. But the message here is dead simple. Pay your bills on time. Set up direct debits. Automate everything you possibly can. This is the single most powerful thing you can do for your credit file. Full stop. Number 2, and this one catches people out, the electoral roll. If you're not registered to vote, you are making life harder for yourself. When a lender checks your identity and your address history, one of the easiest ways they verify it is through the electoral register. If you're not on it, it's not necessarily a deal breaker, but it raises a flag. It creates friction. And friction in a lending decision is never your friend. You can register to vote online at gov.uk. Takes about 5 minutes. You don't even have to actually vote if you don't want to, although, maybe do that as well. But just getting on the register? Instant boost to your creditworthiness. It's one of the quickest wins there is. Number 3, credit utilization. This is a big one, and it's widely misunderstood. Credit utilization is basically how much of your available credit you're actually using. So if you've got a credit card with a £3,000 limit and you've got 1,500 quid on it, your utilization is 50%. And that's too high. As a general rule, you want to keep your utilization below about 30%. Some people say 25. The lower the better, really. And here's the thing, this applies across all your credit, not just one card. Now, this is where one of the big myths comes in. Some people think you need to carry a balance and pay interest to build your credit. Absolute rubbish. You can use your credit card for your weekly shop, pay it off in full every single month, never pay a penny in interest, and it does wonders for your credit file. It shows you can borrow responsibly. That's all lenders want to see. And here's a sneaky little tip. If you've got a credit card you barely use with a decent limit on it, don't close it. I know it's tempting to tidy things up. But that available credit is actually helping your utilization ratio. Close it, and your overall utilization goes up, which can actually make your score drop. Counterintuitive, I know. But that's how it works. Number 4, the length of your credit history. Lenders like to see a long, boring, stable credit history. Long-standing accounts with a good track record. If you've had a bank account or a credit card for 10, 15 years and you've always managed it well, that looks brilliant. This is one of the reasons young people often struggle. Not because they've done anything wrong, but because they simply haven't had enough time to build up a track record. If that's you, if you're in your 20s and you've never had any credit at all, it can actually be harder to get approved for things than someone who's had credit and managed it well. No history is almost as tricky as bad history in some lenders' eyes. A simple starter credit card, used sensibly, paid off every month, is one of the best ways to start building that history. Some people even use a credit builder card for exactly this purpose. The interest rates on them are horrific, but if you're paying it off in full every month, the interest rate is irrelevant. Number 5, hard searches. This is the one everyone worries about. Every time you formally apply for credit, a credit card, a loan, a mortgage, a phone contract, the lender does what's called a hard search on your credit file. And that search gets recorded. Now, 1 or 2 hard searches. Not a big deal at all. But if you've got 6, 7, 8 applications in a short space of time, that looks desperate. It looks like you're scrambling for credit, and lenders don't like that. Important distinction though. Checking your own credit score? That's a soft search. It does not affect your file. You can check it every day if you want. Doesn't matter. Same with those eligibility checkers that most credit card and loan providers offer now. They use a soft search to show you how likely you are to be approved before you actually apply. Use them. Seriously. They exist specifically so you don't have to do a hard search unless you're fairly confident you'll get accepted. And one more thing on this, if you're mortgage shopping and you make multiple applications within a short window, that's usually treated as a single search because the agencies understand you're rate shopping, not trying to get 10 mortgages. So don't panic about that. Number 6, county court judgments, IVAs, and bankruptcy. Right, the heavy stuff. If you've got a CCJ, a county court judgment, that stays on your file for 6 years. Same with an IVA, an individual voluntary arrangement. Bankruptcy sits there for 6 years too. These are the really serious marks, and they will significantly impact your ability to borrow. Now, if you've got one of these on your file, it's not the end of the world. Time heals, quite literally. The older the mark gets, the less weight it carries. And once it drops off after 6 years, it's gone. But during that time, you might need to work with specialist lenders, and you'll likely pay higher interest rates. If you've got a CCJ and you pay it off within a month of it being issued, it gets removed from the register entirely. After a month, even if you pay it, it stays on your file, marked as satisfied, but still visible. So if you ever get a CCJ, act fast. Number 7. And this is one people forget, financial associations. If you've ever had a joint bank account, a joint mortgage, or joint credit of any kind with another person, you're financially linked to them. Their credit behavior can affect how lenders view you. If your ex-partner has a terrible credit history and you're still financially associated with them, that could be dragging you down. The fix? If you no longer have any active joint financial products with someone, you can ask the credit reference agencies to remove the financial association. It's called a notice of disassociation. You can do it online with all 3 agencies. Takes minutes. And it could make a genuine difference. Right, let's quickly rattle through some common myths, because there are loads. Myth 1: your salary affects your credit score. Nope. Your income is not on your credit report. When you apply for a mortgage, the lender will ask about your income separately, but the credit reference agencies don't know or care what you earn. Myth 2: being rejected for credit damages your score. Not exactly. The rejection itself isn't recorded. But the hard search from the application is. And if you keep applying and keep getting rejected, those stacked up hard searches are what cause the damage. Myth 3: you've got a credit blacklist. There is no such thing. There's no secret list of people who can never get credit. Every lender makes their own decision based on their own criteria. Myth 4: using a debit card builds your credit. It doesn't. Debit card spending doesn't appear on your credit file at all. It's not borrowing, so it doesn't count. And myth 5: your savings, your ISAs, your pension pot, your investments, none of that shows up on your credit file either. You could have 200 grand sitting in a stocks and shares ISA and it wouldn't shift your credit score by a single point. Weird, but true. So, to pull it all together, what should you actually do? First, check your credit report with all 3 agencies. You can do this for free. ClearScore uses Equifax. Credit Karma uses TransUnion. And Experian has a free tier on their app. Check all 3, because they sometimes have different information. Second, make sure you're on the electoral roll. 5 minutes, done. Third, set up direct debits for at least the minimum payments on everything. Ideally, pay in full. But never, ever miss a payment. Fourth, keep your credit utilization low. Under 30%. Ideally under 25%. Fifth, don't apply for loads of credit at once. Use eligibility checkers first. Sixth, check for errors on your report. If there's something wrong, a payment marked as late that you actually paid on time, an address you've never lived at, you can dispute it directly with the credit reference agency. They have to investigate. And seventh, if you've got old financial associations with an ex or a former housemate, get them removed. Do all of that, and you are in better shape than probably 90% of people. Not because it's complicated, but because most people just never bother. And look, this stuff really does have real-world consequences. The difference between a good and an average credit profile on a 25-year mortgage could genuinely be tens of thousands of pounds in extra interest over the life of the loan. This isn't abstract. This is your money. Right, that's it for today. If you found this useful, do me a favor, hit that subscribe button. We put out new videos every week on exactly this kind of stuff, practical, no-nonsense money advice for real people in the UK. Drop a comment below and tell me, have you ever been surprised by something on your credit report? I'd love to hear your stories. And if you want to know how to actually use your credit to your advantage, cashback cards, rewards, Section 75 protection, all of that, I've done a whole video on it. It's linked right here. Go watch that next. I'll see you in the next one. Cheers.